Hey guys, so this is Keith. Alright, I want to talk about cryptocurrencies and Bitcoin today. Alright, so there's a couple of things I want to cover, but try to follow me. Okay, so first I'm just going to talk about what is Bitcoin. Alright, so Bitcoin is a digital asset, right? It's basically it's a form of a digital currency that you can use for payments and etc. But the unique thing about it is that it's direct. So if you want to send me money or I want to send you money, we can just do it directly. There's no need for an e-transfer. There's no need for a bank or an institution or nothing like that, right? And what technology does it run on? It runs on blockchain technology, right? So a lot of people don't understand what that is. Okay, let's talk about Bitcoin first, and then I'll talk about blockchain technology. So what else do you need to know about Bitcoin. It was created by this guy. It's a pseudo anonymous guy called I forgot his name now. Satoshi Nakamoto. Sorry, there you go. So he invented it in 2008. It started getting traded, mined and traded in 2009 and 10. And it started to take off then. It was like less than a cent, and now it's almost like 13,000 USD. That's crazy. And the highest point in 2017, it was around 19,000, just over 19,000 USD, right? So the thing about Bitcoin is that in the beginning when it came out, a lot of people frowned upon it. They didn't like it because it was a solution to a problem. Okay, what problem, right? So we already know how money printing works, right? The federal, like I talked about this in one of my other videos. You guys can go see it. The video I think is called "The Fed Does Not Print Money." So go watch that video and you'll know what I'm talking about. But the Fed prints it essentially. The Federal Reserve prints banknotes, gives it to the banks. The banks use that to print more like money in the form of debt, right? So then you're increasing the amount of debt there is in the country, and you're just printing and printing and printing more money, right? This is how money is distributed in the economy. But when that happens, what does that mean? Well, think about it like this. Okay, say you have like a gold, like a rock of gold right here, and let's say that rock of gold equals $1. And there's only one rock of gold, but let's say you printed another dollar. Well, now that rock of gold equals $2, right? So you're getting less for your value, for your money. If you own this, you're getting less. If you own this, you're getting more, right? But then let's say you print 5 or 10 or $100. Now that $100 equals gold. Obviously, this is a really layman's term example, and this is not really how it works, right? It's much more complicated than that, right? But you get the concept, right? So when they're printing so much money, what happens is the amount of money that you have is getting devalued, right? Think about it. Your minimum wage is not going up, is it? No, right? Like your salary's not going up. And if you think about everything else is going up. Like housing prices are going up, rent is going up. So really, you're getting less for your money every single year, and every single time they print money, right? They try to manage inflation, and that's kind of how it works. So to solve this problem, they have Bitcoin. So what are some of the special characteristics of Bitcoin, right? So if you want to compare it to gold, scarcity, right? Something that is scarce is very valuable. Okay, guys, like, so one of the reasons why everyone likes the Louis Vuitton brand is because they make a limited amount, and then they publicize how scarce their products are. There's only this many of them, or this, out in the public. Or like Lamborghini, there's a special edition. There's only, I don't know, 150 of them, and we're selling like this. This is like what brands do, right? But why do they do it? Because they take after what gold is, right? Or silver. It's scarce. It's a limited amount. You can't just create it out of thin air. You have to go digging the ground for real gold, right? There's only so much there is in the world. So just like that, in Bitcoin, there's only 21 million Bitcoins out there that can be mined. What do I mean by mined? I mean like that can be created. That's it. You can't have more Bitcoins than that. Okay? And then, so currently I think it's about 18 million and a half, roughly, Bitcoins in circulation. The rest will have to be kind of mined, right? So, and out of those, some of them are already lost. What do I mean by lost? So you buy Bitcoin, you leave it on your computer, and then years go by, you forget about it, you throw your computer out. Like many people have done this, right? 2008, 9, 10 when they were mining it, but back then they thought it was nothing, so they forgot about it, and then they lost it technically. It's like losing your USB device or something, right? It's kind of gone. What are you gonna do, right? So for those like Bitcoins, like they're never gonna be recovered. They're gone. So then it's just making Bitcoins even more scarce and even more valuable. So what people have to realize like what money is. Right? Money is simply the transfer of value. That's it. Nothing else. It's not that complicated. It's transfer of value. So imagine if I go to a coffee store, right? And I, instead of buying a coffee, I give them a water bottle for a coffee, because let's say me and the cashier believe that the water bottle is equivalent to the coffee, right? I know it sounds like bizarre because that's not what we do at all, right? But when a group of people have trust in a system, then that becomes valuable. That gets traded like money. That's kind of what happened, right? And think about it, like everyone believes that our dollars are worth something. That $1 is equivalent to so and so, and you can buy this with the $1, like a chewing gum or something, right? Where does it come from? Right? The government has told us that this is the dollar and this is how much it's worth and this is the value of it, and everyone trusts the government, therefore they trust money. But it's not actually backed by anything, right? The dollar is backed by government promises and the military, but that's about it. But when it comes to Bitcoin, what is it Bitcoin backed by? It's backed by blockchain technology. And you have a large community of people that really believe in blockchain technology. What is that? What is blockchain technology? Okay, let me explain it to you in a layman's example, okay? So you have a piece of paper here and you have a piece of paper here. Two pieces of paper, right? On this, like it's kind of like those little mini books that you used to have back in the day. I don't know if you guys remember, when you go to the bank, you get it stamped and gives you all the transactions. It's like that, okay? You have a piece of paper, you have here, person A, me, sends money to person B, you, great. Person B, you, send money to person C, great. Another piece of paper, right? Remember, B sends to C was the last line. Let's put that on the first line of the second page now. So person B sends money to person C. That's the same line that was the last line here, great. Next one, person C sends money to person D. What did I just do? I took the last line on the first page and I made it the first line on the second page. This is a block, or this is an individual block, and it's linked together by a chain. Well, how is it linked together? Well, the last transaction line here is the first transaction line here, therefore it's connected. That is what blockchain is. That's it. A lot of people who are actually into blockchain technology would probably get really mad at me because that was the worst way to explain it. And obviously it's much more complicated than that, but essentially this is what it is. That's it, right? And it's really, really hard to duplicate this. It's like nearly impossible, right? There's a lot of things that go to support why this is so valuable, right? So because you have the system of trust, and because Bitcoin runs off of the blockchain technology and the network, it's highly trusted. That's simple as that, right? So people buy and sell Bitcoin. Now, what's very special about it? It is an asset that can 10x in the near future. That's what's valuable about it. Remember I gave you the bad example of gold and the dollars? Okay, so there's only 21 million Bitcoin in circulation. Unlike gold, you can keep digging and finding gold, right? But you can't do that with Bitcoin. When you mine Bitcoin, you don't make more than 21. That's not what you're doing, right? So then, think about this. There's only 21 million and they're consistently printing more and more and more money. What do you think is going to happen to the value of Bitcoin? Right? The more dollars there are in the system, the more dollars you need to buy one Bitcoin. This is why Bitcoin was less than $1 in 2009, but now it's, are you kidding me, 13,000 USD, and in 2017 at the peak during the bubble, it was like almost like just over 19,000 USD. That's crazy, right? So one of the best strategies for buying Bitcoin for the average investor. I'm not talking about day trading. I'm not talking about anything risky. I'm talking about simple everyday person. Like my mom has Bitcoin. I told her how to buy it and it was very easy. I have a link below in the description. Like if you go there, for Canadians, you can click on the ShakePay link. For anyone, you can click on the Coinbase link as well, or the Binance link. Right? So for Canadians, I really recommend the ShakePay link because it's really easy and pretty cool. So go down in the description, click one of the ones that you guys prefer. Coinbase, everyone has it. I would recommend that too. If you're Canadian, ShakePay, and for everyone else, Binance. Right? Go click on those links, register, open the account, and then once you have it open, you just fund the account. Like with ShakePay, you can e-transfer the money into your account. It takes like 5 seconds, and then you click buy, and that's it. Like it's pretty simple. You just exchange your dollars for Bitcoin, and then it'll be sitting there on your phone, just like that. same thing with Coinbase and Binance. Except with Coinbase and Binance, you have to verify your account and your identity. It's not that long. It's pretty simple. It's really easy to do. Highly recommend it. So the strategy. Now let's go back to that. The best strategy and the best way to do this is something called dollar cost averaging. That's it. What is dollar cost averaging? Simple. You got a job, or you make money monthly or bi-weekly, weekly, whatever, right? Every time you get a paycheck, you allocate a small amount of money, whatever you're willing to lose to afford, into Bitcoin. That's it. Okay. So what do I mean? Like, say, even if you're making minimum wage, you take like $50 from a paycheck, or $100 for a paycheck, and then you put it into Bitcoin. And you keep doing that every 2 weeks. Don't bother looking at the price. Don't look at what's happening in the news or anything like that. If it goes down, don't worry about it. If it goes up, don't worry about it, right? Because in the long term, it's gonna go up, right? So there's a lot of a rumor, Bitcoin is gonna hit 500,000 per one Bitcoin, or USD, or $1 million, maybe not, right? But this is something that is definitely gonna appreciate slowly over time. But during this time, it's gonna have peaks, large peaks, right? There was a huge peak, I believe in 2012 and 13. There's another big peak that happened in 2017. And now, because we're in a recessionary period in 2020, right? We're expecting to have a huge peak that's coming up. It's called a bull run, a Bitcoin run, right? That's when it slowly goes all the way up to a new high, and then it crashes. When it crashes, it doesn't go back to what it was before, right? Guys, remember, it was less than $1. So the way Bitcoin goes, it'll be hovering for a bit, it'll have a bubble, and then it'll crash, and then hover for a bit, have a bubble, crash, hover for a bit, have a bubble, crash. But this is obviously over the long term, and it gets more and more longer over time, right? So 2017 was the last bubble, and now we're in 2020. There's a lot of people, you can YouTube them if you want, but like, they're really smart people and macro economists. People who have Bitcoin, like someone like Raoul Paul, you guys can YouTube him. He's from the Real Vision Group. He thinks the next bull run is going to happen in 2021, going towards 2022, and by that time, or within the next 5 years, right? But it's going to start soon, and then by that time, Bitcoin will definitely 10x the money. But then, of course, after the crash, it'll fall. But for my long-term investors, I would say, regardless of what the price is, just whatever you're willing to lose, just dollar cost average in Bitcoin, right? Because it's a safety asset, right? It's kind of like owning gold, right? The only thing is it is volatile. What does volatile mean? It means it goes up and down a lot, but you don't want to look at the price. But for those who are willing to sell, guys, this is the time, right? For those who don't want to, invest for extremely long term but want to make some money, guys, just start buying it every 2 weeks. It's not that hard. You just put the money in, buy it, and you forget about it. Every 2 weeks, get into the habit of doing that. And if or when Bitcoin does have its next run, there you go. You're gonna make good money, right? Can't tell you how much money you're gonna make. I don't even know. No one really knows. If anyone says, "Oh, this is what's gonna happen," they're lying to you, right? No one really knows, but it's a good way to protect yourself. Obviously, I'm not a financial advisor, so you can't go and take everything I say word for word, right? But do your own due diligence, do some research, and find out about it. Anyways, guys, it's in the description below, right? So I've listed a few links for you guys. I made sure I went out and got the correct link so you guys can use it too. So there's a one for Binance, like I said, Coinbase. There's also one for ShakePay for the Canadians out there as well. So go ahead, go down, open the link. If you guys get the ShakePay one, you guys get $10. If you spend $100 on Coinbase, I think you also get $10 to buy Bitcoin. So check out those links below. And if you guys like the information in this video, give this video a thumbs up. I really appreciate it, and subscribe too. Thank you guys. Take care.